What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Sain, and if you're new here, I make videos on personal finance and how to invest and build wealth through the stock market. I started this Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my free link below, or sit back and watch. Either way, I appreciate you. Guys, today's video is about a stock update. We had a lot going on in the market, but I want to highlight 3 companies in particular that I want us to take a look at today, and I need to talk to you guys about a stock that I sold. So without further ado, let's open up a free stock on today as well as take a look at my portfolio. Okay guys, as you can see, my portfolio is currently sitting at $35,558.19. Today guys, we are going to open up a free stock from Mary. Mary, I want to send some love your way and say thank you. Thank you, thank you, thank you. You guys know when you use my link, you get a free stock and I get a free stock, and it's a win-win for both of us. And so I want to say major salute. Thank you for using the link. We're going to go with the one in the middle, and the one in the middle gives us VBI Vaccines for 1 share, $4.39. Once again, guys, if you need some free stock, I got Robinhood down in the link below as well as Webull. You get 2 for using them. So check that out. It's free money. Ain't nothing better than free money, so go ahead and use that. Guys, today we're gonna look at 3 stocks, starting with NAT, which is currently sitting at $4.58. Listen, guys, you already know my position in this. I'm sitting at 125 shares. My average cost is $4.07. Guys, look at the total return. Look at my screen. It is up 12.5% today. Again, this is about staying the course. This is about averaging down on certain positions so you can build out your position the right way. I wanted to highlight this stock today because the few I'm gonna show you today are weathering the storm of a down market. And this is the power of being diversified, because while a bunch of stocks is going down, this stock has secretly creeped up. Okay, and so I have a 12% gain on today in this stock alone. Again, NAT is a long-term play, mainly for the dividend, but I wanted to put this back on your radar just in case you was wondering what's up with NAT. I got more videos coming out about it soon, but I wanted to add it to our update for today. Stock number 2 is NIO, ticker symbol NIO, sitting at $14.01 right now. Guys, it is a few things that I noticed that I want you to be mindful of. You guys know we building out our position in this stock as well. As you can see, I currently have around 35 shares. My average cost is $12.08. You guys know I bought this around $6 or $7. However, in order to add and increase my position, I had to add more shares. What I noticed though, and reason why I added them today, is because I've been able to figure out their trading pattern. And so guys, although they're sitting at 14, which I don't want it at, and they always stick around 13, I don't want it at 13 either. I did notice around the 1240 to 1245 range is where it goes to when it drops. And so for myself personally, I will be buying more at around 1245. And of course, if I can get a major dip, you guys know I'm looking forward to it dropping to 10 or below. But until then, I'll buy it at 1245. I just want to put that on you guys today if you want to build your position out at the right price point. Stock number 3, guys, is Nokia, ticker symbol NOK, sitting at $4.30. This one again has also weathered the down market today. As you can see, I currently have 125 shares of this. Check this out. Look at my total returns on this one. It is up over 5.5%. Again, guys, this is the power of being diversified. You already know we are looking for this as a 5G play, and when it doubles or triple, we're going to be in position to take advantage of all of that. But right now, let it do what it do. Let it run its course. This is a set it and forget it type of stock, so I don't want you guys that's holding this to be looking at this every single day hoping that today is the day that it jumps up. It don't work like that. Okay, so again, be patient. Look at some of your other positions, be building those out while you're building this out, knowing that our day gonna come. And guys, I couldn't go without telling you about the one stock that I sold today, which happens to be Wells Fargo. Now, if you follow me on this channel, you know I am a die-hard Wells Fargo guy. I keep this as a staple in my portfolio, and as a dividend investor, this was one of my major players. You also should know that I don't sell stocks, and so something major has to happen in order for me to do that. And so what happened today, guys, is Wells Fargo had to report their earnings, and they did terrible. But that's okay. I can deal with a terrible earnings report. What I can't deal with as a dividend investor is I thought that they was going to cut their dividend in half. They paid 51 cents. I thought at the bare minimum they would go down 50% to around 25 cents. Guys, these dudes cut the dividend down to 10 cents, and that's just unacceptable. And so as a result, I can no longer hold Wells Fargo. That cut was too steep for this current climate. There's too many good stocks out there for me to be sitting in this much cash. And so, guys, I sold this at a loss. I lost $200. I bought this at 26. My average cost was 26, and I sold it at 24. And so, guys, again, I talked to you about strategic losses. You need, for tax purposes, to write off $3,000 in losses a year. This is a way to do that. And so again, although I'm selling, I'm also being strategic. So when tax time come around next year, I'll be able to write this off like nothing ever happened. Listen, guys, that's my update for today. Now it's time for our word of the day, which is dip. Guys, when you hear the word dip, when you hear that term on CNBC, that simply means that, like today, certain stocks will take a dip. So Tesla, for instance, was 1,700 yesterday. Today it's sitting around 1,500. Guys, that's what we call a dip. It's just a simple way to see a correction happen within a particular stock, but it's an opportunity for you to buy the dip because it's going to shoot right back up. I know a lot of you guys has been hitting me up about Neo and other stocks that you might be holding that has dropped today. And so again, you guys know on red days, that means stocks is on sale, and that's time for us to go shopping. That's not a time to panic. You guys already know. When they sleep, we eat. Stay tried and true to the formula, okay? However, a dip is also a healthy thing to take advantage of. Sometimes, man, these prices are just too high. And so you as an investor should hope for a dip. You should be waking up every day, hopping on your brokerage account, saying to yourself, man, I hope this stock falls to this price so I can buy it right here. That particular type of mindset is that of one that's looking to buy a dip, okay? And so I need you guys to look forward to dips, embrace dips. That's all we're having right now, primarily in the stock market, is a dip. And so nothing to panic about, but more or less an opportunity for you to buy stocks at a better price. So guys, I wanted to put that on you today. Make sure you put that in your back pocket. So if you hear dip, the market took a dip today, things like that, buy the dip. That's the main one you're going to always hear. Buy the dip. Wait, buy the dip. Okay, that's all some of us do. You make a killing, invest in that way, but it requires you to be patient. Patience is a virtue. So listen, guys, dip is the word of the day. Next up, it's time for our question of the day. Today's question is from Victor Winston. He said, I absolutely love the content and amazing advice. Is there any advice you have for a college student trying to build their portfolio who doesn't have as much cash flow outside working the summers due to classes in the fall and spring? Victor, I salute you for sending this question in, man, and I want to give you some encouragement really quickly. Guys, I think if you are in a position like this, especially if you're on the younger end of the spectrum, a college student, a person that's a young professional, what have you, I think it's important that you invest what you have. After your priorities are paid, I'm a big proponent of making sure if you got rent, if you got a cell phone bill, a car note, whatever it might be, make sure you take care of those things first. But with whatever you have left over, make sure you deploy that cash into the stock market. And so I don't care if that's $50. I don't care if that's $100. I don't care if it's $300. Whatever you have, feel free to invest that. The thing that I always recommend is invest in what you know. I tell you guys all the time, I'm an athlete at my core, and as a result, I wear Nike. So my very first stock I bought was Nike. Invest in what you know, starting off until you get a feel for the stock market and kind of what kind of investor you want to be and what kind of stocks you want to own. For me, from Nike, because I'm an athlete and because I like to get fly in the gym, That's what I invested in first. For you, it might be Apple. For you, it might be Microsoft. For you, it might be a number of different things. But think about what you like, what you looking at right now, what you wearing right now, what kind of car you drive. All those things are things to be mindful of. What stores do you go to? What do you buy at the grocery store? Those are how you determine what the first few stocks that you buy as an investor is. And then from that point, that's when you begin to do some real deep diving, begin to get very technical and start to understand the market, how it moves and how it works. But starting off, the amount of money doesn't matter. The whole goal is to get started. And so, Victor, I just want to send some love your way and tell you to stay encouraged. Jump in with whatever you have. Feel free to get an ETF if you need to, so that you don't have to worry about picking individual stocks. An ETF is a basket of stocks that allows you to own a bunch of companies versus having to own just one. I hope that was helpful, guys. If you have comments, make sure you let me know and I'll add them in my next video. Listen, I make videos like this every week, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll see you all in the next one.